morning. How you guys doing? Nice to have you with me again for another episode of our little show that we do here each morning. And yesterday we had a nice long episode where we were giving you a little open house tour of the school. Hope you guys enjoyed it. Hope you guys got something from it. Even if you're not deciding to be a member now, at least you know, have a better idea of what it is here we do at the school and what makes us unique. So I think maybe you might see things differently now with each show that we do, and maybe have a better understanding of the information that we're passing along to you. So thanks for joining with me again for another morning. It's nice to have you as always. So what are we going to look at today? What would you guys want us to take a look at? I'd like to look at gold. I think gold is looking pretty good. I'd also like to take a look at Euro US dollar, maybe even the pound US dollar. So right now, let's just shrink this up here. And how about like that? That should be good. Beautiful. Now you can see my screen. We have gold up here. And I was telling you about how we should expect a move up on gold. And that we had a very specific area here that we were watching for, and we're watching for a move to the downside to be formed from here. So far we got a little bit of a push to the downside, as you can see here on the 4-hour chart. Nice little push down. To time an entry here is going to be a little bit tricky. You need to go down to the lower time frame charts, because I do believe that there's going to be a push down here like this, okay, which is going to bring price down into the area of demand down here. Now, the interesting thing is that if you look at this exact same area of demand, let's say on the micro futures chart, you'll see that the demand zone has actually been contacted to a certain degree. So it's a little bit tricky. The data is, on one chart it's telling us no, it hasn't been hit, and on another one it's telling us yes, it has been hit. So it's going to be a little bit tricky. I go with this chart. This is the IDC data feed, and we have found when examining multiple data feeds that this is the one that we should be relying on. So that's what I'm going to go with. I'm going to go with the one that I know I can rely on. So as far as I can tell, this supply area should come into play and we should see a drop to the downside. But the question is, how do we know that there's going to be a drop from there? So what I would do is I would drop it down to the 1-hour time frame, and I would examine the 1-hour time frame. And so I'd make some drawings here like that. What I'm doing is I'm just examining the chart and locating some short-term institutional buying that took place here. And let's put that up front. Okay, so I got a couple areas here that I'm seeing. So what is this telling me here? This is telling me that on this rally up, the institutions were significantly buying here and significantly buying here, okay, in order to contact this area of supply up here. All right. So the deal is we think price is going to drop. All right. But logically, if you think about it logically, for there to be a drop in price, what needs to happen? There needs to be areas that were used for buying to eventually be removed, right? That's the logical process that you have to take. So if areas of buying are not removed and instead price reacts from them, then can we expect a move to the downside from that area of supply? No, obviously no, right? But what if price was to go down and break through these areas of buying that were used by the institutions to facilitate the move higher to contact that supply. If it was used to break through, then we'd have the odds that the move down is going to take place. So that one zone I'm watching for would be here. Okay. That's the one zone I'd be watching for. I wouldn't want to get in early simply because of what we were talking about, how it looks like the demand could be in play. So I'm not going to risk going short when I don't know for a fact that it's going to drop. Okay. It's in between supply and demand right now. So I'm going to wait for it to show me proof that it wants to drop. And then if I see a nice trade signal to get in short, I'll consider going in short because that would be a nice drop here, right? We're talking about, a move like this, zoop, to here, okay? That could be a nice trade there, but only if the chart presents something decent. Right now, what it's presenting me is not so great. I don't like this type of price action, okay, for many reasons, and we talk about it in our school. But this type of price action is not ideal. So we have to go with what we have, and what we have is this zone here that was used to facilitate the move higher. So I'll watch to see if this breaks through and see what kind of price action we get to the downside, okay? Because you know how we like to look at price action, we like to look at structure, and we like to see whether there's a trend or no trend. There is no trend here, okay? From what I'm seeing here, there's no trend here. And I know you could force a trend line somewhere here, but it's really not what you should be doing. Yes, price made a higher high here. Yes, you could probably, do something like this and say, "Oh, look, that has been contacted." Yeah, it's possible, okay? It's also very possible that we get a reaction from here, okay? Right now, where price is contacting right now. It's very possible that price drops from here. But the thing is, when you look at the quality of this trend line, it's of low quality. So if it's of low quality, then that means this area is not reliable. It doesn't mean it's not going to hold. It just means I wouldn't want to put my money on it, okay? I like to put my money on high probability setups using high probability structure because I know through historical chart analysis, which is what we do in our classes, I know that when there is a high quality structure and it produces a zone that could potentially be used to facilitate a move, it's high odds. And if it's not high quality in the structure, then the signal is going to be a low quality signal even though it's located in a very nice spot. Because listen, this is located, this whole situation that's taking place here is located in a very nice spot. Okay, it's a really nice area of supply, and considering what's been taking place on the higher time frames, I would not be surprised to see a drop from this area at all. So I'm going to be watching for that because I think that will produce a nice signal for us here. But we'll see. I'll be patient. We'll watch as it reacts from this area and see how it plays out. Okay, so gold to the downside is the bias from what I'm seeing on the chart. If that demand on the 1 hour time frame gets contacted and we see a push up, or even if price pushes up from here and breaks through this area that I just drew, there's no short signal whatsoever here. Even though we're contacting supply, there's no short signal. We need to see on the lower time frames that the banks are shifting momentum from up to neutral to downside before even considering taking a short position, okay? So just be aware of that if you guys are trading gold. Don't just short blindly, okay? It's going to cause you trouble if you do that. So pressure to the downside. So we got that move up on euro. It's been really struggling though, huh? We never got that move up all the way to the area of supply. Look at that. It rallied up and it stopped here. And then it came down, then rallied up a little bit higher and stopped. It's just failing to move up, isn't it? It's just failing to move up. So what's the cause here? Well, it looks like it's just falling short of that area of supply on the daily chart. So what's key to understand here is on the weekly chart we have a situation where price has been ranging for quite some time. Okay, as you can see here, quite some time. And here's the interesting thing. It's been ranging, but it's been ranging at an institutional supply zone. So, to get an indication of what is likely going to take place, one of the things that is very powerful to do is to use the CFTC data. All right, this is one of the ways I use the CFTC data, and this is what we do at the school, and this is what we teach at the school. So I like to look at, you know, first things first, we have a massive edge in our trading because we understand that price is contacting a massive institutional supply zone here. Okay, that's the first thing. We have a major edge because we know that. So then we look at, well, when price entered into this area of supply, it would be around April 2023, right? So let's take a look at April 2023, and that takes us down to right here. So I'm going to do a screenshot. Oh, actually, what I'll do is I will bring it like this. Oh, let's go to Euro. That would be helpful. April 2023, right about there, okay? Now I'm going to do a screenshot here so we can take a look at what the positions were in April. Here we go, okay? So those are the positions held by the institutions when price was entering into that area of supply, okay? We had longs at 246,000. We had shorts at 73,000. Look at the coloration of longs. Let's just do this, okay? Look at the coloration of the long positions, okay? Very red, meaning they're aggressive with long positions. And we shouldn't be surprised because what just ended up taking place here, a massive rally up into this area of supply, okay? Now we look at short positions and what do we see? The coloration of the cells are blue, meaning they were neutral. Not surprising because price was entering into a major area of selling. So, of course, they wouldn't be holding any short positions at that time because they were just so focused on going long. All right, so let's shrink this back again. And now let's go to where we are at currently. And let's just put this on top and compare the two, okay? So what we have here down below is where we are at currently versus where we were. So remember, price rallied up. We contacted a major institutional supply area. We used to have long positions at 246,000. Now we're at 160. So you can see they took profits on long positions. They rallied price up into a major institutional area of supply. And for all this time, what they've been focused on is offloading long positions. At the same time, they used to be at 73,000 short. Now they were just recently at 209,000. Okay. The last couple of weeks, we see them reducing their short positions from 208 to 181 to 167. So they were taking some profits on short positions. But when we look at the charts, we'll see exactly why, okay? Again, everything has to be logical and has to make sense. If things are not logical and they don't make sense, then how are you supposed to have any confidence in what you're doing when you're trading, right? So you can clearly see they were offloading long positions and piling into shorts, right? So offloading longs all throughout here. And at the same time, well, I should do this so you can see. Long positions were offloading here and at the same time accumulating shorts. Okay. And then what did they do the last couple weeks? We saw some reductions of short positions. Why? Well, take a look at the big drop. So they're increasing shorts, price drops, now they're profit taking from those short positions. So the theme that we're seeing here, the theme of the euro, has been profit taking in long positions, piling into short positions while they're in a range. Now, shorts are the more aggressor of the two positions, which leads me to suspect that we're going to see a push to the downside over time. We still really haven't broken out of this range when you take a look at price, but there are some key things taking place on this chart that are indicating to us that over time we should be seeing a drop. So what does that mean for gold? Because when we look at gold, we'd like to see a correlation between the two, right? We want to see that they're both going to move in a similar fashion. So let's look at the correlation between gold right now and euro US dollar, right? So let's take a look at that. We'll put it up here. And as you can see, there's been times where it's very positively correlated here at the between the middle part and the top part. That's positive. It dipped into negative correlation, and then it went back into positive correlation, and now it's slowly going into negative. Why is that? Well, because we see a rally up here on gold, but that's not happening with the euro. So this is okay. I don't mind seeing this. And the reason being is because if this continues to grow here, even if it's like halfway, what it's telling us is that there isn't a strong positive correlation between gold and the euro. And that's okay because there's a lot of evidence supporting the fact that euro is likely going to be dropping over the medium term, potentially even longer term. Um, and on gold, we see significant demand zones just below price. Okay, we were talking about that area here, just below price. So that means if gold was to drop, it would be about that much more. Whereas with the euro, let's bring up the euro again, the drop could be significantly more. Okay, so if they're not perfectly positively correlated, that would actually be a good thing and would be positive for the evidence that we're gathering and for this idea of euro dropping much more further than gold. So I'm going to be paying attention to that because these are the signs that we look for. This is part of the Sherlock analysis process where we look at the evidence, we look at the data, and we ask ourselves, what is it telling us? What is the chart telling us? And where the evidence is supporting the fact that the euro is going to drop. But when we look at gold, it looks like the drop is going to be short-lived. So when we look at the correlation, we want to see evidence to support the fact that the euro could make a more significant drop than gold. Okay? Makes sense? All right. So that's the situation. Let's close this off. We don't need this anymore. Okay, so we'll be watching that going forward. I think also that so this drop to the downside is something that will take a while to be created and to potentially even be set up. There is also a good chance that over the medium term we're going to see a move up, and then the longer term we see a move down. What's medium term? Many days, many weeks move up, and then long term, many weeks, many months move down. Okay, very very strong potential. So we'll be watching for that. Again, if there's going to be a move up, we'd want to see at least a supply zone be taken out, right? I wouldn't speculate on a move up from where we're at right now. We got a supply up here. So for me, you know, if we get a move up here, I wouldn't want to be long right here because we'd be inside of a supply area, and we could definitely see a move to the downside form from there. So I would want to see this removed first before I even consider going in long. Okay. All right. So long, short, medium term, more slanted towards the medium term. So that could work out quite well. Let's take a look at the pound. The same situation with pound. We're sitting here at the lows, and I'm seeing really good evidence to support the fact that this could drop here. Okay, but it could also rally up to this area and then drop. If it rallied up to this area, I'd be happy because that would be the most ideal spot to get in short. All right. So just be aware of that going forward, folks, because I think that's going to play a significant role in how these currency markets move in the next, at least for the rest of November and December and heading into the new year. Okay? So be careful out there. Don't make any irrational trades. Just make sure you allow the charts to show you what's going on. For that gold, potential short trade, but watch those lower time frames. Make sure you see institutional demand being removed first before you get into those trades, okay? That's how you play it safe. That's how you protect your capital. And that's how you make sure that if you're going to risk money, you know exactly how much to risk because you know exactly which zones to be basing your trades off of. All right, folks, that's it. I'll leave you with that. I hope you enjoyed this session, and we'll talk to you soon, all right? Take care, everybody.